Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Friday there was much confusion after reports that the US Federal Reserve may likely debate on a smaller interest rate hike in December, which has given some hope that the US Central Bank may be poised to adopt a less aggressive policy stance. Meanwhile, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, plummeted after the report, away from its 20-year highs, and it was changing hands around the region of 111.80. From the price action, we can see that the Australian dollar has rejected the bottom side of that range, which was close towards that 61.60 area, and from the rebound has posted an engulfing candle, which now waits confirmation. If we do see further gains, then we would need to see a break above the level of 64.40, which would initiate a further rally on towards the region of 65.30.45. And from there may see some profit taking. However, from the recent pattern that I've been viewing, the fact is that there was bullish divergence from the MACD, which has finally come through after the hammer was negated, but now with the inverted hammer and also the engulfing candle has produced a further bullish outlook for the start of this week, and a break of 64.40 would conclude the rally on, as I mentioned, to 65.30.45. Well, we're still challenging this down channel, which is seen on a broadly base, started this year, and that is around the 114 area. We do need to see a strong close above 99.35 to indicate a further rally on towards the region of 101 and maybe onto a projection or trajectory of 103. As I mentioned, the dollar index did plummet away from its highs. That was seen around 113.80 to 111.80. And now let's see how the market starts for this week. We do have an engulfing candle, but the point I'd like to see is whether or not we can close above this down channel, which would initiate the further bullish case. On Friday, the Japanese yen sours suddenly, rising suspicion of an intervention from the Japanese authorities. As we can see here, like the previous whipsaw price action, the market briefly touched the highs seen around 152 nearly and plummeted to the lows of 146, soothing some of its bruises as the whipsaw price action may have given a little bit more of a dent this time, and therefore looking down towards a potential target of around 145.60.90 and reassess from there. Well, the sterling has been somewhat mixed after the UK market came under fire on wondering who will win the next race to become the country's next Prime Minister after the resignation on Thursday from Liz Truss. There was speculation that Boris Johnson may be in for the running, but now there is reports that he may actually step down. Looking at the current price action, didn't quite get an engulfing candle like some of the other markets, but we got a hammer and also an RSI that's supportive to see a further gain that is up towards the region of 114.95 and then reassess from there. An engulfing candle emerges for gold after the challenge at 1,621 was rejected, and from the rejection has put the perspective back on the top side, which is seen around 1,664 to 66. A break above there would give further scope, and that is up towards the region of 1,680.90 area. We do have a positive RSI, but we do need to see the support from the MACD. However, a break or close above 1,666 would confirm this engulfing candle and therefore give further merit to the rally to the bull case and the top side of 1,680.90. Finishing up with oil, the market was a little bit choppy and indecisive, as we can see here, as it's tackling this level around $85 a barrel. We do need to see a close above 85.40 to reinstate a further bullish case to 88.25.55 as a potential target. Failing this, well, then the market may actually tumble back towards that base at $81. Well, that wraps it for the morning. Thank you very much for joining me, but please look out for the intraday report and also enjoy the great start to the new week.